You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, welcome to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. You guys know the drill by now in terms of how to find us. How to find us. It's been a long show week, listeners. You guys know how to find us. Of course, the website, theoptionsinsider.com. Get all the good stuff from the network going back to all the way back, as far back as you want to go, really. All the way back to 2007, if you can believe it, including some shows that are no longer on the network and new ones. It's been a healthy mix over those years. Go check out, see what you missed. And, of course, as always, you can always get us via the iTunes, the TuneIns, the Pocket Casts, all that good stuff. Or just grab our mobile apps. Got it all baked in there as well. If you have questions, suggestions about the app, hey, we don't build it, so you guys hit us up with all ideas. That's great. We pass them along to the people we license it from, so it's not exactly our app. But we love your feedback. We know things can always be better, and we're always working to make them better. And, of course, however you listen, including live, you can join us live every Friday, noon Central, 1 p.m. Eastern, via Mixler. And we could bring you on to the old program here as well. So you can listen, ask questions, join, see how the sausage is made. Either way, we're looking forward to chatting with you guys. And speaking of chatting, let's see if we can get chatting with my volatility cohort, the partner in crime over there in the world of all things volatility, Mr. Greasy Meatball, Mark Sebastian from OptionPit.com by way of Carmen Line. But it looks like he's having some connectivity issues here. So we're going to keep on rolling to the show, and then we'll bring him on during the volatility review.
It's time for the volatility review.
This is indeed the portion of the show where we break down what the heck is going on in the world of volatility, from a trading, trending, volatility, trends, unusual activity, all that good stuff type of stuff. You know, listeners here, I'm just doing a little behind the scenes housekeeping here to make sure everything is working out so our hosts and co-hosts can join us on the old program. There we go. Let's see if that helps. There we go. All right. And it is an interesting day, an interesting week here on the old Volatility Views program. You know, we were predicting, and I apologize, by the way, if you tuned in to last week's show and it was hard to understand, hard to hear, don't blame me, blame the meatball. We did that at the Option Pit Pro Trader Summit, and it was, I think you could say, a wee bit noisy there in the background. They're a boisterous group, those pro traders. I like to call them the crazies, and I think a lot of them even will freely admit to that. And they were indeed having a good time while we were doing the show, and it was audible, shall we say, in the background. So if you didn't make out everything there, I do apologize. But then again, that's what happens when you're doing shows in front of a bunch of crazies. But fast forward to today, we are coming at you live Friday, June 22nd. Hard to believe we're so far through June already, and it's kind of a mixed bag out here on the old street with the Dow kind of rally ho mode, up about 0.75 of a percentage point or quite close to it. The S&P up a little less than half of a percentage point, about 11 handles and change. The tech-heavy NASDAQ actually unched on the day, so it is another one of these days where the markets are somewhat split, and it kind of depends what you like to trade, exactly what is lighting it up for you out there. And, of course, with all this uncertainty on the old day and a little bit of mixture across the day, we're seeing VIX kind of taking it back in. After all, it has been one of those weeks where VIX was kind of rallying almost in spite of itself. We talked about it a little bit yesterday on the option block, that given what we saw in the futures and everything else going on out there in the term structure, the huge move we saw in VIX cash was, I think, a little bit head-scratching, was a nice way, euphemistic way to put it. And we talked about it actually yesterday on the option block. I think our old pal, the Rock Lobster, was saying that he was looking for, given the fact that where VIX had set up, that looked like he was expecting a 50-handle move within the next few sessions. Not quite seeing that today. We're seeing about 11, 12 handles. But still, he said over a couple of sessions, so we'll give him the benefit of the doubt and say that he's got a few more sessions for it to add up. But so far, at least, things are moving and shaking out there. VIX cash, like we mentioned, coming back down after being at some rarefied, lofty heights earlier in the week. Hit today, even hit a high of about 14.5, 1460. And earlier in the week, we got as high as about 40, same level, about 14. It's actually, no, 15, 18. We actually broke the 15 handle at one point. So we were looking pretty tumultuous there earlier in the week. This is kind of the endless give and take, the yin and yang that continues from the trade wars and our friend Mr. Trump and his counterparts over there in China and overseas in Europe, continuing to ratchet up the talks on trade wars and, of course, the market feeling the impact as a result. So it's been a weird one. We were hoping maybe a lot of this was in the rearview mirror, and then, of course, it kind of comes roaring back with a vengeance. But for all of you who wanted a little bit of vol, maybe not this much this quickly, but still, all of you who wanted a little bit of vol, you got it this week. You know who wanted vol, by the way? A lot of you guys have been writing in. We joked about it on the show last week, but you guys have been inundating us with questions about our old friend Mr. 50 Cent. So we could start there, actually, while we're waiting for the Greasy Meatball to get his act in gear here in terms of what's been going on out there in 50 Cent. Like, yes, he is back. A lot of people have been writing about it, Bloomberg and others. Kind of a bit of a slow time as well, so probably indicating some of that going on as well. But he gets a lot of traction. We talked about him last year. Of course, this is the infamous buyer of many, many upside calls, usually around the 50 cent premium level, hence the name, hence the moniker. And he is back. And he is back with a gusto. In fact, I joked yesterday on the option block that why did VIX pop so hard? Well, because 50 Cent is back. So he kind of leaves an interesting volatility wake going on behind him, and he is back. We talked about it last week. He was buying 50,000 lots at a clip, 20,000 lots, buying quite a few. Some of them for 49 cents, so I don't want to unfairly malign him. He was trading all the way down to 49 cents and below. But it is worth noting, I think other people have been writing about, including Bloomberg, a little bit of a different volatility regime for him this time. The last time he was really gobbling up calls, and the only time it actually really worked for him spectacularly was back in February when he had all those on. Back then, he was buying calls around the 21 strike, so a little bit of a different regime. So that means VIX only had to pop through 21 for him to start making money on those calls. This time, he's got to go all the way out to 27. So we're in a little bit different regime. That's where 50 cent buys you. 50 cents. Oh, 50 cent. That's where 50 cents, to use proper grammar, buys you in the vol space these days. So a little bit of an interesting regime. Again, we talked about him before. He's obviously hedging something else. So people come in here writing these histrionic articles about why he's just nakedly specking to the upside of VIX. Interesting stuff, but not exactly where we lean. We also did see some people writing in for us with this article talking about our friends over there at Macro Risk Advisor. We'll have to get them on the show one of these days. Just if no other reason, to explain to them that we here on the Vol View Show are the ones who dispense the monikers in the volatility space. But they like to call the VIX whale. They like to call them the VIX elephant, which is clearly incorrect. But they also came out, they were recommending, instead of doing 50 cents dids, they came out with what they were calling, I believe, yes, the Seagull spread, which is, I have to admit, a new name. I haven't heard that before. It's an old strategy, nothing new under the sun really in the option space. But they were recommending instead of buying those 27 calls around that level that 50 Cent was buying, you come in, buy the vertical, the 17-23 July vertical, and then that's just a vertical, so they can't call that a Seagull. Then they say they turn around and also sell the July 12 put. So it's a vertical with a put kicker. They call it a Seagull. I don't know why. I would like to ask them that, so maybe that's a good reason to get them on the program. But still, interesting stuff. I certainly, of the two outright positions, the outright calls or indeed the Seagull, if you prefer. I would definitely choose the latter over the former, but still interesting stuff out there. Also interesting, worthy of note is I mentioned VIX has been rocking and rolling. It's our old friend VVIX, also rocking and rolling these days, well north of 100, which if you follow the show, if you listen to it, you know how we break it down for. When it gets north of 100 is when things start to get interesting out there in VIX land. We have been over that for some time. Pretty much the entire week we've been over the 100 level, which of late, usually in these times we see VVIX kind of have a floor of around 75 and an upper bound around 100. It gets north around to 125. If things really start rocking and rolling, if it gets beyond that, then things are crazy. But north of 100, usually a good indicator that things are moving, and we're seeing it today. Got up to about nearly 108, 107 and a half. Got up to 108 earlier this week on the 19th as well. So it has been vacillating around a lot. We're seeing a lot of vacillation out there in VIX land. So not perhaps surprising, but VVIX, one of our favorite indicators out there in all things VIX. Talking about VIX, let's move on to the futures as well. Like I said, the cash right around 13.5 right now. The front month future we're seeing, front week really left, about 5 days left, but just a little bit shy of 14, so about a half a buck premium out there in that first month's contract. And then we get out there into 2 months out, and we've got, let's see if my screens will play along with me. Looks like we've gotten similar levels here of, my screens aren't playing ball, but somewhere a little bit north of that as well out here. VIX options also looking pretty interesting. We'll get to that in a wee bit as we break down all of that activity as well. I do want to touch on a little bit as well. Now I'll get Mr. Meatball's opinion on this as well. A lot of you have been writing in as well about these tweaks that they are proposing and making out there to the VIX settlement process. We've been out here outspoken many times on this program saying that there do need to be some tweaks. There needs to be more transparency. There need to be more players coming in to offset those imbalances that are going on out there in the VIX futures around that settlement process and the whole VIX settlement process indeed. And they have said themselves, the SIBO, that one of the problems is fewer players, not enough players to really offset those imbalances. We proposed a few alternatives to that. The SEC and CFTC have announced investigations, as we've discussed on this show. Now it looks like SIBO kind of trying to turn the tables on it a little bit. They're pushing back to the regulators and maybe not putting the ball in their court, but at least putting some of the onus on them, saying some of the reasons that the settlement process has as little liquidity as it does. Again, saying a lot of the participants they've talked to are holding back because saying they come in to try to trade against these imbalances. They feel that it's after the cutoff point. If they respond to these requests or for these big imbalances, they could be hit with a fine or indeed some higher regulatory scrutiny. If you know anything about the prop trading world these days, liquidity providing world, the one thing they do not want is more regulatory scrutiny. So they're keeping their powder dry in that sense. So SIBO, in some sense, is laying some of the blame here at the feet of the regulators. I do want to get some folks in the SIBO on the show. Maybe get our old pal Russell back on to talk exactly about what they're doing and why they're taking this move. The SIBO came out here today saying the exchange understands that some market makers may hesitate to provide liquidity that could resolve order imbalances. As a result, this perceived risk may lead to reduced liquidity and may exacerbate the time it takes to open a series at a competitive price. So interesting stuff. They're not quite, I was hoping for a little bit more specificity on exactly what they plan to do and how they plan to fix this. I don't know if this is, I don't think this is enough to really stem the problem. But hey, more liquidity around that auction time certainly could go a long way towards maybe stemming some of that belief. Some of the recent settlements haven't exactly been great. Didn't hear a lot coming back from the most recent one, so that perhaps is a sign that maybe we're heading in the right direction, but still a lot of interesting stuff to be uncovered. I want to get them on here to talk directly about what they're planning to do, what changes they want to make, and then we'll see from there whether or not this is sufficient to satisfy the regulators and indeed to satisfy a lot of you out there who are perhaps quite reasonably suspect. And we've said before, if you're worried about that and you trade VIX on a regular basis, then hey, just stay away from the settlement and you're okay. On the other hand, people have said to us, and I understand this viewpoint as well, that settlement's a big part of the actual contract. And in terms of if you can't rely on the actual closing value of this thing, then kind of what's the point? So I could kind of see that viewpoint as well, even though I think for you guys who are day trading in, trading out, and that's a lot of you out there, I don't think this issue really is going to impact you either way. Just close out, roll. I know you already do, a lot of you, so it shouldn't rate as high as perhaps it does on a lot of your radar. Speaking of your radar and what you guys are interested in, and we've done a lot of digging recently into some of this Google search data. We did a little bit more of that this week to kind of break down what the heck you guys are interested in when it comes to all things volatility. And Google has that data, and thankfully they're willing to share it with us through their Google Trends algorithm. And we're looking here at, we thought we'd break it down by some specific products these days. More interestingly, one of the ones you guys love to hate and love to trade, that is VXX. And we're looking at the data from 2004 till present. Now we know VXX is not exactly the entirety of that time frame, so a little bit of a skewed data, but still, as you might expect, we saw interest popping up in VXX, really starting to take off around that 2010 or so time frame, which I think is understandable given the lifespan of that product. And then, of course, we saw some pretty dramatic spikes. And interestingly enough, the biggest spike, I don't think will come as a surprise to you, the 100 level. Remember, Google ranks their data with 100 being the most interesting, and then number 2 right behind with other points. So they go from 100 and they break it down from there. The 100 point being February 2018, no surprise there. And then coming hot on its heels, June of 2016 with a 95% ranking, which is kind of interesting. Speaking of kind of interesting, he sometimes is at least kind of interesting. I think he found his way out of the Costco. We are joined by the greasiest of meatballs, Mr. Mark Sebastian. How you doing, sir?
I'm good. How are you?
Good. Where are you hankering down today, sir?
I am in our world headquarters in Chicago. I was stuck on a call for the Greenwood Project, unfortunately. I mean, fortunately for the Greenwood Project, unfortunately for Volviews.
Indeed. Well, we just broke down a lot of good stuff. I'll get a chance to get some of your takes on it. First off, catch us up. How's your week been? What's catching your eye from a volatility perspective, sir?
You know, it's been a weird one, hasn't it? You know, the market just kind of fluctuated.
I think that's an understatement, sir.
Yeah, the market just kind of fluctuated. We haven't done very much. You know, the Dow's been kind of ugly, I guess. But the Russell 2000 has been super strong. The S&P has been flat. And kind of everything has just kind of bounced around. It's been it's been odd. I'll say that.
It has been odd. Were you as surprised as your counterpart, the Rock Lobster, yesterday by yesterday's, shall we say, aggressive upside move in VIX land? And were you equally as buying into the fact that something had to happen today to really settle up the accounts?
Yeah, yesterday's VIX move was really a little overdone, and so the options were we either move or we don't, and VIX comes in, and what we're looking at is we didn't move and the VIX is coming in. I think there is probably more downside for it. We're going into the 4th of July and the end of the quarter. Next week does not appear to be a great week to be a VIX bull.
Yeah, this is already a historical time where, trade wars aside, you usually see vol settling in a little bit, shall we say. And now you're right, with everything else on the horizon, we shall see how that plays out. Speaking of how we'll see, I was just kind of giving my thoughts on everyone's been hitting us up, Mark, as you might imagine, about these tweaks to the VIX. Which are kind of vague. They haven't really spelled out a lot, but they're SIBO kind of turning the tables a little bit on the regulators, saying, hey, you're the reason nobody's playing in our auction process because they're afraid of getting fined. What are your thoughts on the most recent reasoning behind what's going on in the VIX settlement land?
You know, I'd heard that from a couple of players there, and I do know that they're trying to smooth it out. One of the things they're kind of playing with is allowing for, call it, it's not exactly the right way to describe it, but call it a reopening of the auction process for those that want to take the other side in one fell swoop of a trade, as opposed to having to have all these weird individual market orders that may or may not get filled, right? The problem is the auction process closes at what, 8:20 or 8:15, allowing, then you're the only way to put more in is to do a bunch of individual market orders, right? So, and that might not necessarily trade that print. So if we allow people to step in and really try and trade that print in one strip of options, then traders are able to more easily manage the exposure that creates on getting filled on all or part of that trade.
Yeah, I think anything at this point is better than nothing. People have been looking for a little more specificity. I wouldn't mind a little bit more of that as well. But still, we've said before, there is something to be what they said about the lack of liquidity. What's causing that lack of liquidity is certainly a cause of debate. I think we've outlined, you outlined your idea before for how to kind of treat that imbalance. This is at least, I guess you can call this a half step towards that. Would you agree?
They're starting to try, yeah.
That's something. And so something is better than nothing. I think everyone agrees that getting some handle, coming to grips with this issue, getting a settlement that is at least somewhat more reliable is in the best interest of everyone. The active retail, the pros, the SIBO, everybody wants to have a product that, this is the product people like. They don't want to have to question how it actually works and whether it's quote unquote being manipulated. You see, by the way, I got the professor who wrote the paper on VIX, Mark, now sinking his teeth into Bitcoin, whether Bitcoin was manipulated. So he's become the manipulation professor down there in Texas, which is kind of interesting. Maybe I'll get him on the network to talk a little bit, as well out there. But interesting stuff. We were talking right before you came on, Mark, as well, mining some more of this Google search data for what people actually want and are interested in the volatility land. And I was just laying it out right when you came on. So maybe you heard it. Maybe you could cheat on this one. We'll see. I was laying out the top 2 data points for the most interest in the history of VXX back to 2004. Number 1, this is by month, obviously. Number 1 was obviously February this year. That's the highest data point on their search graph. But I wonder if you can pick what number 2 would be, roughly a 95% of this February. What would your guess be for month and year?
Number 2, maybe January 2009?
Not a bad guess. I'm looking here. That, according to this data, that would be probably right about 50% of what this February was. So the actual almost number 2, 95% of the interest that they saw in February was June of 2016.
Really?
An odd. I would not have picked that date off the top of my head. But I'll have to go back and look and see how much of a sell-off we got, how much of a move we got in VXX in that time. But clearly, June was where the action was. Speaking of where that action is, Mark, we did a little bit more data mining to see where in the U.S. people are the most interested in volatility. Now, this is just the term volatility. We didn't get into products. We got into that in a little bit. So I'm looking here at the top 5 states with the most interest. Remember last time, the number 1 options interest, according to Google, was Maine. So these data points could be a little interesting. Just keep that in mind. If you had to guess the top 5 regions that are interested in volatility, sir.
What were my options? It was
all 50 states. I'll let you guess any of them.
What are the 5 most interested in options according to Google?
I would guess at least one of them you probably wouldn't guess. Maybe 2. Maybe 3.
All right, and is that on a percentage basis?
Yeah, it's a per capita. So if there's 1,000 searches in each state,
that's going to be super skewed.
It's going to rate more in South Dakota than it does in California.
Right. All right, I'm going to say Wisconsin.
They love cheese and volatility. Yes.
Texas.
Oh, Texas. Interesting.
I'm going to say Iowa. I'm going to say New Jersey.
I'll give you the hint. The number 1 is one you probably would expect. I'll give you that.
Chicago, Illinois.
Close. Actually, New York.
New York. Yeah.
The number 2 is, shall we say, maybe Petterfee might like it. Some hedge funds might like it. That was a hint.
Delaware?
No, a little bit farther north up the coast, adjacent to New York, shall we say?
Connecticut?
Yes, there we go. Blue Bloods.
I said New Jersey. I thought I had the wrong side of New York.
New Jersey is number 3. There you go. And then number 4 is Massachusetts. It's all the mutual funds.
All the Northeast corridor.
Yeah, pretty much. And then number 5, the District of Columbia. So there you go.
That's not a state, though. That doesn't count.
I agree. They call it a sub-region here on this chart. So there you go. So I guess technically with that, he could have gotten 51. But there you go. If we break it down by VIX, so actually searching for product, it gets a little bit more specific. The first 2 are actually the same, New York and Connecticut. Then number 3 is our old Mecca there, Mr. Mark, Illinois. So Chicago coming in. Number 4, New Jersey again. So Jersey getting that love. Obviously, a lot of the data centers there. A lot of the firms actually have some setups in that area as well. So the spillover from New York counts into New Jersey. And number 5, Massachusetts again. So I don't know what they're doing VIX-wise in Massachusetts, sir. But apparently enough to get them ranked in terms of Google interest. Again, if Maine could be the top option state, then you never know what to make of this data, sir. But interesting stuff. Since we're talking VIX, let's get into it. All things VIX options. Today, a fairly light day. The ADV a little bit shy of 500,000 contracts right now. Today, right about 225 as we're coming into about halfway through the show here. About 5-to-1 calls over puts. Overall, the open interest has popped up a little bit more in terms of call interest. About 3-to-1. It was about 2.3 to 2.6 in our most over the course of the last couple of months. So coming up a little bit on the call side. Some of that may be due to the recent pop we saw and people maybe scrambling to get themselves some upside VIX action. Thursday, we saw about 328,000 pretty much every day this week with the exception of Tuesday, of course, was shy of that ADV, 423K on Wednesday. Tuesday, the big day, about 1.2, almost 1.3 million contracts lighting it up. Monday, also going into Tuesday, a pretty active 723,000 contracts. So interesting stuff. Mark, do you have any issues this week with Tuesday and the activity we saw therein?
You know, not Tuesday. Yeah. No, not really. It was just kind of weird, more weirdness. What was interesting is if you kind of watched markets, Friday, Monday, Tuesday, Wednesday, we had kind of these negative markets, Dow leading. The Russell was really strong, and we rallied. Then yesterday, the IWM was the worst performer, and markets never were able to recover. So keep an eye on the rut.
Yeah, today's a rebalancing day, so we'll be talking about that on TWIFO in a little bit. I know we talked recently about recent settlements, Mark, were I think kind of wonky is a technical term. Did you feel as much wonkiness this month, this week, or a little more in line than you thought?
It felt a little low, but not completely out of sorts. Would be the way I would place that settle.
Yeah, I mean, it's always going to feel weird in one direction. That's kind of the nature of the settlement process. Everyone's always going to be unhappy, but at the very least, it wasn't crazy.
Insane.
It wasn't like you didn't feel like there was perhaps an invisible hand on the settlement this time, which is probably a good thing in retrospect.
It's nice that it is beneficial to SIBO when there aren't 200,000 contracts traded in the direction of settle the day or two prior.
Yes, that is a helpful thing. Let's look down. Let's see what people actually were trading. What the big strikes in VIX land. A lot of things coming off the board, obviously, so things are going to be a little bit light. From an OI perspective this week, still here are the top 10 hot VIX strikes right now. Number 1 with a bullet, the July 20s, 195,000 contracts. Number 2, July 25s, 171,000. Number 3, the first put on our list, the July 14 put, 167,000. Number 4, the July 21 calls, about 166,000 there. Number 5, first AUG on our list, the AUG 28s, 160,000 contracts. And then 5 contracts less for number 6 spot are the July 30s with just 6 contracts shy of that $160 level. The 30 strike maintains its grip. It's fevered grip on the imagination of traders out there everywhere. Number 7, the July 17s, $151. Number 8, the July 29s. So if the 30s were a bridge too far, there's the July 29s for you. 147,000 open there. Number 9, our second and last put on the list, the July 11s. $1.46, and round out the top 10 back to August. Once again, the 30 strike, just monopolizing people's love. The Aug 30s, 143,000 contracts open there. About 6 million contracts outstanding, about 4.5 on the calls, and about 1.5, on the puts. Mark, you see anything interesting catching your eye out there from an activity perspective this week, sir?
There's been 50 cents back. I think we talked about that last week, right? 50 Cent is back.
We did. Talked about him earlier in the show as well. People were talking about it. A couple interesting things I brought up. First off, when he was buying last time in February, he was buying around the 21 range. That's what 50 cents would get you. Now you got to go up to 27. So it's a little bit of a different game around that in terms of strike buying. And also, I want to get your thoughts on this. It's kind of funny. A lot of people wrote us in with this article about our buddies over there at Macro Risk Advisors. I want to get them on the show just to kind of the
MRA guys. They're very nice.
Just to teach them that we make the nicknames here on Vol Views, not them, and then that they had this. They came out. They said instead of trading 50 cent way and buying all those out of the money calls, they said instead you should do our Seagull spread. So I said to myself, what the hell is a Seagull spread? So I dug into it a little bit. And here's what they call a Seagull spread, Mark. They said instead of buying, I think he was buying the July 27s, 50 cents, somewhere in that range, or maybe Aug. They said come in and buy the July 17-23 vertical, which is just a vertical, and then they said, and then sell the July 12 put against it. So that's what they call a Seagull spread, a vertical with
Seagull,
a put kicker.
Otherwise known as a call spread versus put, or a risk reversal.
Yeah, exactly.
They named something that's already named.
Been named many times.
Congratulations, MRA.
Many times.
We love you.
Call vertical with a put kicker. You can call it many things.
I'm so pro MRA. I love them. They're a good group for the business.
Ironically, we've never had them on the show, so we'll have to bring them on and pick their brains.
You should. So I'll tell you what I saw. A really interesting combo. Every time VIX got kind of low, we saw a bunch of call buyers coming in, and every time it looked like it was running higher, put buyers would just go crazy. So there's some decent open interest on the July 14s, the July 13s, and the 12.5s, and all the way down to the 11s. There's 145,000 open interest on the 11s. So there is some interest kind of across the board on downside, but then we've also seen a bunch of upside buyers. Your 50 cent, we saw a lot of guys buying call spreads. I've seen the 28.60 go up, the 40 calls. There's been an aggressive July 40 call guy out there. 10,000 of the 40 calls have traded today. But yeah, kind of the weird ones that have traded pretty actively are the July 28s, 29s, and 30s. Those are, more than 100% out of the money relative to the cash, and yet they are 3 of the heavy open interest in July.
Speaking of weird trades, one did catch our eye this week. Just for I think to the weird size of it and the it's almost a trade all trade. Went up on Wednesday. It was 5,242. How many legs they got here? 1, 2, 3, 4, 5, 6, 7 legs. Oh no, 8 legs. 8 legs on this thing. We got. They started off with 5,242 of the July 13 half puts for $1.17. Again, all these are mid-market. All these strikes have tons of OI listeners, so it's kind of hard to ferret out exactly what they were doing. And then same number, 5,242 of the July 11 half puts, doing those for 21 cents. But they weren't done there. They came in the middle with the 12 half puts, not doing it on a ratio, so any sort of fly or anything like that. Just, again, 5,242, so more of like good old put strip for 57 cents of those. But they weren't done there either. They came back and said, we don't like this being a strike away from each other. Let's go into the half strikes. So let's go into the 13 puts as well, 5,242 of those bad boys. And then let's go the other side. Let's do the call strip as well. Let's do the July 23 calls, 5,242 times for 40 cents. And then also, let's go back down the chain a little bit. Let's go to the July 15s for 5,242 contracts, $1.12 of those. And then July 17s, 5,242 of those for 82 cents. And then also the 19s for 62 cents, 5,242 times. So I guess effectively maybe what we have here, Mark, is a nice July 15, 17, 19, 23 call strip with a, what do we got here? 11 half, 12 half, 13 half put strip, all in July. Was that a Carmen line special, sir?
That was all me. How did you know? No.
The size had a ringing of Carmen line to it.
Yeah, it's an interesting trade, though. It really is.
Yeah, I was looking for maybe one of those legs to be like a kicker, so you do a ratio or something, but none of that. It looks like it's just a straight up strip of both sides, both wings, taking all the strikes you can near at the money, and then I guess we'll see what happens. You know, with this kind of size OI, it's always hard to tell if it's closing because VIX is a beast when it comes to that stuff. But still, this one has a whiff of opening, I think, and a little bit of whiff of weirdness as well. Speaking of the whiff of weirdness, VXX always has that whiff about it.
Yes.
And it is had a weird week again this week. Of course, rally ho mode, then kind of coming back down as we are doing it here today. And my system is once again not playing ball with me, so I'm going to reboot here. But while we do that, it was around the 34 level. Where are we right now in VXX, Mark?
We are right now. I have a 32.98.
There we go. So we're coming in at 34, selling off a little bit of another handle or so. In the intervening time as VIX erodes and VXX erodes, perhaps getting a little bit of level. Still, that brings us pretty much in line almost exactly with where we were last week. This time last week, we were at a 33, and we're at almost exactly 33 right now.
So think about this, and I think this is a strong point for kind of what the issue is with VXX as a hedge. All right, for those that don't believe me and Mark that it's not a great buy and hold. All right, where did the S&P settle, Mark? Here's a quiz. Without cheating, where did the S&P settle on the 15th? So last Friday. No cheating.
So last Friday, the 15th, that would be...
You think higher or lower than where we are today?
I think it was... We're at 27.61 right now. I'm pretty sure it was around this level, like maybe 27.65, something like that.
Yeah, the low for the day was 27.61.73.
So almost exactly where we are right now.
But remember, we got a vicious rally in the back half of the day.
Yes.
And we only settled down 3 points to 27.79. Okay? All right. Now, here we are today, 27.62. And the VXX is lower than where we were. And so the S&P is off, call it 17 points, and VXX has lost money.
Yeah, that's what we say.
I think that's, for people that are trying to wrap their head around how VXX works, I think that's really the best example I can come up with for kind of what's happening.
Yeah, I mean,
Does that make sense?
It has those spurts, and certainly we've said before is we don't do a lot of it, we don't caution a lot of it, but there are times when you want, especially if you have a lot of downside in VXX, you might want to have a little bit of upside to offset that. We talked about ways to do that before. I think you guys spend a lot of time on that in your VXX Made Easy, do you not?
We definitely talk about it. One of the things that makes VXX making easy is if you understand what I just went through. It'll be much easier for you if you accept the easiness of VXX going lower.
Yes, there is a certain amount of ease to that. So yeah, all the Sturm and Drang we saw this entire week in VXX is effectively unched. Here we are with S&P, not quite unched, but a little bit lower there, and VXX is almost literally unched. So if that doesn't bring it home to you in stark relief, then I don't know what will. The Jan taking that VXX, what people are trading out there, looks like a few more people are piling into those July 90s, Mark, because that spread has grown a little bit in OI since the last time. I think they did 78,000 of those.
I saw a few more trade this week.
Yeah, it's 106,000 of the July 90s open now, and almost 100,000, 99 of the July 70s. So maybe it's all of our friends who've been piling in, selling it, driving that OI. Everyone's been writing into us. I'm selling that. So maybe there's some of that going on. But number one with the bullet, still the Jan 10 puts, which I don't know where those are at now, 2 cents, 3 cents, something along those lines, so 1 cent, who knows. But still 201,000 of those open. But the number two is that July call vertical. So if you're interested in July upside, I don't know if you want to go that far, but if you're interested, I think we have some listener questions about July upside later, so maybe we'll get some of that. But if you're interested in upside in VXX, you're not alone, at least to the tune of July getting, that's pretty much, I'm looking here. Oh, there is one other call. Actually, there's two other calls. Actually, no, I take it back. There are three other calls in the top 10 for VXX right now. Number 7, the June 75s mark, with about 47,000 open there. Number 8, the Jan 2019 50s. I can certainly get behind that more than I can the July 70s. 39,000 of those. And then number 10 on their top 10 are the June 80s. Not too sure about those. 35,000 open to those bad boys. So there's a more call playing going on out there of late than we've seen in a little while. So read into that what you will, listeners. Meanwhile, you guys got some cues on the old brains, and maybe we'll get to some of those in some of the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. I got to mention, Mark, you won't hear those transitions, so just imagine them in your head. But our audience hears them, and I hear them, and so that's more fun. But still, so if you're wondering, why am I in such a cocoon of silence? That is why, sir. These are the prices to be paid when we're down here in the roving southern studio. Let's see. Let's check in on how our Twitter question of the week is going. And Mark, people are not in a premium buying mood. We've heard that from people. We asked them a premium buying. That's kind of a silly, fun premium buying question this week, and they're all about selling that premium. So don't worry, listeners. We'll get you some premium to sell and harvest next week's question. But this week, Mark, we were asking them something fun, something silly in the spirit of what's otherwise outside of trade war been a relatively weird, quiet, bizarre time. We said, hey, let's look at some entertainment names and see which one of these entertaining stocks you actually maybe want to own some premium in. So we looked at some straightforward stuff. July at the money straddle. You can't get too nuanced in 140 to 280 characters, so we try to keep it easy for you guys. We said, just gun to your head, you got to buy some premium. Which of these July at the money straddles would you rather own in your portfolio? These are entertainment names, remember? So we gave you Mark's favorite, WWE, that July straddle, right around $7 earlier this week. The WYNN, so the WYNN Casinos Gaming Resorts, $12. The SeaWorld was right around $2, and Disney, which has had some interest in movement and development with the whole Comcast Fox deal of late, that was pricing in about $5. I don't have where these stocks are right now, Mark, 'cause I don't have exact. I know Disney's probably around a little bit less than 5%. The other percentages I don't have off the top of my head, but I know maybe, are you a WWE man? You want to buy that stock? Certainly has taken off of late, more than doubling in the last couple of months. I didn't even know it was public till about a month ago, so that shows how in touch I was with the world of wrestling until recently. But Disney also moving. Mr. Meatball, if you had to pick one of these straddles to own in your personal holdings, which would it be, sir?
What are my options again? Give me put one more time for the
WWE
listeners.
for $7. That stock right now is a little bit shy of 70, so a little bit shy of 10%. It's about $68 for WWE. So
World Wrestling Entertainment.
Yes, and you got WYNN. That's a $12 straddle. That stock right now is at a 170. Yeah, so there you go. And then you got SeaWorld next. That's a much cheaper one.
Ooh.
$2. That stock has, I think, had some. I think their recent earnings were all right. That's about a 10% one as well. Stock's $22.
Well, here's what I'll say for SeaWorld. How did getting rid of the elephants go for Ringling Brothers?
Yeah, you'd think. Shamu was kind of their featured attraction. He was on the cups. He was on all the plush toys.
Oh, yeah. Everyone loves Shamu.
In fact, as I'm recording this, I can look out my window and I can see the coasters at SeaWorld. We're that close to it. So
wow.
maybe they're listening to this right now and have a sad face on. I don't know. But the stock looks like it's doing all right of late. Since earnings on the 8th, it was $18. It's up about 4 handles from there. So I'm about 25%. So it's had a good run, I guess. People are liking what they're doing. So, Mr. Meatball, all that a long way around to buy you some time. Which of these are you buying, sir?
If I had to buy any straddle.
I know you're a degenerate premium buyer.
I know. Well, And
all you were writing in, hey, can I sell the wings again? You can do whatever you want in your pretend
whatever
mind,
you want to do.
as long as you're buying straddle.
I'll tell you, there's going to be the one that's going to have the most fireworks is WYNN. I'll take WYNN.
Yeah, probably. That one's been on the move. Also, the priciest to get a little bit more bang for your buck there.
Yeah, and it's that's been an ugly one. That's the ugliest chart, so I'll go with WYNN.
Yeah, it's about 4% or so straddle there. So yeah, interesting one there. I know you guys don't like buying premium. We heard from you loud and clear, so we'll give you a selling one next time there. But yeah, I'm with you. You want a little bang for that? I kind of wish I had that WWE straddle a couple of months ago. That thing has been off to the freaking races. Who knew Fox and Universal were going to pony up for
a huge deal.
Pony up for entertainment wrestling, sports entertainment.
Well, I mean, it's live. It is live content.
Exactly.
And it's borderline sports.
Just athletic enough.
Yeah, it's athletic enough. And if you look at the top 50 programs that were viewed last year, what is it, like 48 of them are sporting? Yeah,
they do pretty well, even on their middle of the week random shows on USA. Yeah, so Fox dumping UFC, picking up WWE. I guess that says something about the value of their and certainly their stock reflecting it. Off to the races there. So if you were early on the WWE trend, ballyhoo to you. Let's see, we got questions here from Rick S. Got a pretty basic one. Good timing for this question, I guess. He wants to know, what exactly does it mean to roll positions the week of expiration? Obviously, we talk about this a lot. Maybe we should clarify exactly what we say for some of the newcomers to the show. We were just talking about it before when I said, if you're worried about the VIX quote-unquote manipulation, then you can just roll to get away from that. And, of course, what that means, listeners, is quite frankly, you close out a position you have right now, usually done the week of expiration. You can do it anytime you want. Listen to our Option Block show or read some of our activity stuff on the website. You see people roll all the time for a bunch of different reasons, but a lot of it happens the week of expiration because you don't want to go through expiration for a variety of reasons. Maybe in VIX, you don't trust the settlement process. You want to get away from it. Maybe you want to just extend your positions before things get a little turbulent around the settlement exercise kind of type process. So you want to avoid that. You want to roll ahead of that. You want to keep your positions intact. You just want to move them out maybe a week, maybe a month, whatever the case may be. It's very literally closing one out and then reestablishing it in whatever time frame you want. Next week, next month, next year, whatever floats your boat. But it's they call it rolling because you're kind of just keeping it alive. You're kind of moving it from one expiration cycle to the next. Hence, you're not closing, you're just rolling. So that's kind of where it is. And in big products like SPX and others, that's actually an actively quoted thing. How's the roll looking right now? And that trades very liquidly, and that's a way to keep track of how things are looking. That's something if you're going to be trading any index products. You definitely want to have.
I can tell you some great stories about roll trading around expiration.
Regale us with one roll story.
Oh, I don't know. Well, all right. So I was working at an unnamed SPX firm, and we had a position where futures were. It was June futures were coming off, and it was I want to say a May expiration. So no, it wasn't a May expiration. Yeah, it was. It was a May expiration, and so we were trying to buy May. We had to buy May and sell June, and the roll was trading like a quarter under, meaning that you had to pay 25 cents to sell June. And I don't know, and we got a couple thousand done, but we had like another 9,000 more rolls to do, and the price kept moving and moving and moving, where it got like down, because everybody had the same position in the pit. It got down to like a half under or something like that. And the owner of the firm said, bah, and took on the print risk on 8,000 rolls.
Because why would you want to take that off? He's like, I'm not paying a half under. That's too much.
Yeah. So it just so happened that so the next morning I'm on the line and he is dumping minis, just 500 at a clip. Sell 500. South 500. And it just so happened, I don't know how the guy figured it out, but the print it was a low print for SPX. So the May-June roll that was trading a half under ended up trading $1.50. We got legged into for $1.50 or $2 over.
Oh.
It was so.
That's literally rolling the dice, listeners.
That's a $2 million, a north of $2 million winner. Not bad.
Not bad. That's not something you want to try to replicate. that's
Well, it's not something you want to replicate unless you have the stones to back it up.
Yeah, we always used to get all that stuff. Usually that's what happens with the roll. It gets bid in whatever direction the pit all has it on, right? So the earlier you can get it done, the better. Because, there's no mystery how everyone has to do it. And everyone's quoting the same thing. And you get it done earlier. But sometimes if you get a little stubborn, you want to wait, and it can work out in your favor. It could also wipe out your entire year in a few minutes. So,
correct.
Yeah, some fun roll stories. Back
there you go.
There.
You've been regaled.
There you go. That's quite the regaling, sir. Well done. Let's see. Another Telio. Are there any long VIX vehicles that don't erode to zero? Well, I can think of a few off the top of my head. I'm talking about, I think he obviously means like the ETP world, right? And
the answer is no.
Yeah, in that sense, the answer is no. I think the futures.
There are ones that do it a lot slower.
Yes, exactly. If you want to go minimum exposure to that stuff, just go with the futures. Just don't even bother with any of these Franken products that try to replicate them in some haphazard slapdash fashion and go to extreme lengths to do. I mean, look at the best example is probably what the VIX up, VIX down stuff, right? And look at stuff Whaley had to look at the lengths they had to go to, listeners, to try to replicate that in some sort of meaningful fashion. And that prospectus was maddening. It was mind-numbing.
And there's one product that has not done exactly what they were hoping, but if in a very short dated trade can potentially do okay. I think it's XVZ as I recall. Maybe I'm wrong. There's a few of them out there that try and like not have there was one called XVIX that tried to only be contango, which was always interesting, but it tried to only collect the roll and not have vol exposure, which is kind of interesting.
Only be contango. I like that.
It didn't work. Yeah, it was XVIX.
It's a theoretically interesting. I said I don't know how practical that is, but it's theoretically interesting. Yeah,
it didn't work.
I've never heard of it, so I guess it was not a resounding success.
So XVZ still trades, but it hasn't done what they were hoping it would do over its life, and so I really don't have I really don't see a lot out there.
Yeah, I don't know how you.
The answer is essentially no, and your best bet is to try and do it like the Thompsons do, which is try and strategically go long and short instead of just constantly being long. Trying to be constantly long is not going to make you money long term.
Yeah, at least if you're playing in the futures, it's a little bit more straightforward. You can see where the curve is each month. Okay, I'm buying it here. It's more elevated compared to this one. You kind of have an idea where your future is going to, how that's going to play out because of the term structure. So it's not quite the mystery, that some of the other ones are, where they just erode for no reason. So yeah, if you can handle the futures, if that doesn't turn you off or turn your stomach, then the futures is probably the least scary way to go for that prospect. I just realized I never paid off our poll for our listeners. They agree with WYNN, Mark, 38% choosing the WYNN straddle.
Oh, good job, listeners.
29%.
Way to go, listeners.
I think a couple of votes just came into the WYNN, so they're obviously listening live. 29% saying Disney. I could see that one, too. That one's has some potential to move $5. It's not usually a big mover. It's been kind of around that 100 level for a while.
Now that the deal's closed, there's no more news.
Yeah, that's kind of been the big driver. 17% going SeaWorld and 16% close fight for WWE. So it's got another day or so. You guys.
I like the punniness of the close fight.
Yes. It is indeed. See,
excellent work.
You like what I did there, sir?
Excellent work there. Excellent work there.
You like what I did there? All right, let's squeeze in one more listeners because they got the love and they got the questions. J-Tac, he's got a suggestion. Maybe this is for your VXX made easy, Mark. He says, looks like call front spreads. So short 1 near out of the money, long 2 Firstly means the old short 1x2 listeners, if you're confused, in VXX are the best way to hedge long-term VXX puts. That way you're covered against a blow-up, but you're not shelling out a ton for straight-up calls or verticals. So interesting. He's kind of flipping that coin a little bit, Mark. We've been talking lately because of that big VIX call spread about reasons you may want to own some VIX upside and how you could best do it. Obviously, the use case you come up most of the time is because you have those puts, right? And you want to have something in your back pocket against a blow-up. Is this something you guys outline in your VXX Made Easy, the old 1x2? Or?
I'm not I've seen MRA put out some things like that. I really like that when vol is real high in VXX. It's not as much something I like in kind of a normal environment that we're looking at right now, because you never know when that thing could just take a dive.
Yeah, I could maybe see doing it that way if you got a hedge over the long term, because if you're just buying calls or verticals up there against whatever you got on, you're throwing away a lot of money.
I really like that I use front spreads for the actual VIX product all the time, because it has a floor. It has, not a floor, but a de facto floor in the product. So whereas, you can get a runner in VXX and have all kinds of problems.
Yeah. But you got the long too, so so you got the net long units to the upside. So if that call spread comes into play, the 70-90, you're looking pretty good on that on that front spread. So I could see what you're thinking there. Interesting suggestion. We talked about 1x2s in VIX Legion times, but we never talked about it in VXX. So interesting suggestion there, Mr. What was the name there? JTAC. We'll talk about it some more as we keep on rolling to our final segment. It's time to break out the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. That music means it's time for our final segment. It is time for the crystal ball. Mark, we have a bit of a weird one this week because the last time we sat around together to talk volatility was actually in the middle of the week, last week at your Pro Trader Summit. So we didn't really have a prediction for this Friday, so we can't really pick a winner. Our last prognostications were, I was at 1185 and you were at 11. I think Andrew cart me? I come in at like 1180. He came in by like a nickel, I believe. So we won't count that because there's no carping allowed on the show.
We're all wrong.
We're all wrong anyway. It doesn't really matter. We're multiple handles off here. But that said, I'll be magnanimous, sir. I'm feeling generous today. It's a nice, beautiful day.
Oh,
here
thank you. What a lovely boy
I shall allow you, sir, to go first. What are you feeling for this time next week, VIXland?
What did I guess last week?
Well, our last guess we have from you is 1155, and that was a week and a half ago.
I'm going to say 1155.
I had a feeling you might want to stick with that one.
It's a good one. It's a good one going into that week.
It's not a bad one. Remember, listeners, as we mentioned before, we got next week.
The 4th.
We'll be the coming into the holiday weekend, the truncated holiday week. So Vol usually not catching a bid in that time. As we're finishing off the show here, VIX Cash is breaking through the 13 half handle down to about 1335 or so. So chances are it could erode even further today, as most of the indices have now turned to the green. So any bid there was left for VIX.
Yeah, everything's green.
Yeah, everything's green now. So it's not looking good for VIX bulls right now. 1340, 1335 right around now. So two handles lower than that. Not exactly crazy. I'm going to be, just because of our old buddy, Mr. D in the Washington, you never know what's going to come out there. I'm going to go a little bit north of that. I'm going to say just a touch north of the 12 handle. I'm going to say 1205. There we go.
All right. So, I like that. I think you've got a good shot too.
I'm not upset about that. No. I had a feeling you're going to go crazy low this time.
Yeah, why not?
So that's why I let you go first. Yeah, see how generous I am, sir? The generosity I have here just knows no bounds. Unfortunately, listeners, we have come to the end of this epic journey through the world of volatility. We talked some good, some bad, some fun, all sorts of good stuff here. But before we go, Mr. Meatball, what are you guys cooking up over there in the land of the pit, sir?
We are cooking up all sorts of funness. Right now, we've got directional option trading made easy that you can get at, and we're just having ourselves a great time.
Having yourselves a great time. If you want to join the party, I can speak to that last part, listeners. They do have a good time when they get together, the Pro Trade.
We do. It's a lot of fun.
You can just
Pro
listen.
Trader Summit was a blast.
You can just listen to the cacophony in the background of our recordings from that. And
it was a good time.
People were having a good time. Mr. Meatball was having a good time. I could confess to that as well. How did I know I haven't checked in with you since the 3 days were concluded. How did the whole thing unfold?
Yeah, it was great. We're going to need a bigger room next year.
It's a good problem, right? Good problem to have.
It's a great problem to have, yeah.
Get on over to optionpit.com, register for some of that stuff, and then you too can experience the cacophonous joy that is the Pro Trader Summit. And on behalf of myself and the Meatball, I want to thank all of you out there for downloading, streaming, and subscribing. We'll be back here a little bit. I'm not done yet. No, the Southern studio is still going. We'll be back in about half an hour with a little bit of FIFO. And until then, we'll see you next week for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.